Welcome everybody to Unlocking Your Success, Successful Trader of the Month for August 2016. Before we get going, we would like to remind you that this presentation is for educational purposes only. We are not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk in options is substantial, and be sure you are aware of all your risks prior to placing any trades. Also, assume that we are using hypothetical computer simulated trades unless otherwise stated. Either way, you have to be aware that hypothetical computer simulated trades will sometimes be different than live trades, so please just be aware of that for various reasons. Okay, so we have Successful Trader of the Month this month. Let me quickly just tell you about that. Successful program that Sherry and I came up with to reward and honor those traders who've put in the work and as a result are doing awesome with their trading. They receive the prestigious Lock in Your Success Successful Options Trader hat and a place forever on our wall of fame. Successful Trader of the Month is also for the aspiring trader and for you as well, because by having those successful traders share their experience with you, you'll gain useful insight and become inspired by knowing that it can be done and that there are many different paths to do so. A trader can qualify for Successful Trader of the Month in several ways. One way is to provide a trading plan in a recent trade that we evaluate. Second would be to stand out by helping in the community. It might be by sharing useful information or providing guidance or encouragement for people. Third might be as if I notice someone who breaks through a significant barrier or overcomes a challenge. And fourth would be probably for something like creativeness. In other words, someone who successfully adapted their trading and unique personality, whether it be through one of my styles or something completely on their own, which would even be better. Today we are speaking with Tim Pearson, and Tim has attended, several of our programs, such as APM Squared, Trading Triangle in Maui, and he was chosen because he's broken through the barrier of understanding the market and is now trading as his primary source of income. He's been able to push through those tough times, which inevitably come in any part of life that we're successful in, and he continues to trade successfully. And he's been great about sharing his experience with others as well. So that said, good afternoon, Tim.
Hello, John.
Tell us a little bit about yourself and how you came to be a trader.
Okay, well, you know, I have a PowerPoint. I guess I'm going to tell you my life story of how I became a trader.
All right, that's great. So tell us about your journey and your experience and how we can help other people.
Okay, well, thanks for having me on. And I start way in the back, and I noted that on a nice day in 1958, the Dow Jones Industrial Average was at 451. Can you imagine that?
Wow.
That's when I came onto the scene, and I noticed that a year later, when I was one, it was 609, had been up 35%. I also noticed that there'd been some kind of a pandemic in 1957, but the point is, you know, when I came along is when the market turned around, and it was a foreshadow of things to come. I was born in Seattle, lived here all my life, and contrary to popular belief, it does not rain here all the time, but it is gray quite a bit of the time, I'll admit that much. I've had a couple of careers. I used to be a clinical microbiologist, and then I changed into being a software engineer, and that was the bulk of my career for about 30 years, and then I retired in 2012 and started trading full-time. I'll tell you the story about that. I did work for Microsoft. It's a very good place to work, and one of the cool things is they don't care when you do your work or how you do it, as long as you get it done. So if you like to work in the middle of the night and sleep in late in the mornings and not go to work, that's fine as long as you get your work done. One of the unique things about Microsoft I really enjoyed. I am a commercial rated glider pilot. I had a job as a pilot giving rides in gliders near here for a few years, and even now, as you can see in the picture, I fly these radio-controlled gliders. That's a picture of my most recent glider that I brought online a couple months ago, and it flies great. I love it.
Wow, that thing's huge.
It's huge. It's about 10-foot wingspan. It weighs about 3 pounds, and it flies great.
That's super.
Now, here, John, I want to ask you, what were you doing when you were in high school?
I wasn't in high school in 1976, so. But yeah, I was fooling with cars when I was probably in 1976, but I was only about 9 years old. So.
Oh, okay, all right. Well, that's when I graduated from high school, and I actually had a bright blue 67 Camaro like this one. Not quite as fixed up as this one was, but being a kid, I tried to race it on the street. I tried to build it up, make a hot rod out of it, and failed at just about all of that. But it was a beautiful car, and I wish I sure still had it.
Yeah, those are
I,
beautiful cars. I used to love fooling around with those.
anyway, the reality of what I did was I would go to the library and I'd look up books on futures trading. And Stanley Kroll was popular at the time, and he had a sailboat, and apparently he made a lot of money trading futures, and I was inspired by that. So I was much more boring than racing cars and being popular in high school.
Indeed.
The other thing about me is in high school I was a computer nerd, and in '76 computers were just starting to hit the scene. This is what we used, a teletype machine with a paper tape reader. And I spent all my time in front of a machine like this, typing in code in BASIC.
Wow, that's incredible. I don't even remember ever even hearing about a computer until I was like 1984, 1985 time frame.
Yeah. Well, this was the era of mainframes, and this was one of the ways you could communicate with mainframes, but microcomputers had not quite hit the market yet. They're just about to hit. But it was a memorable epoch in my life, and so I put this up. And you notice down here in the corner, if you can see there's a telephone dial pad here.
It's built right in.
That was so you could dial up the modem and connect to a computer.
Nice. Amazing how far we've come in such a short period of time.
Oh man, it's amazing. Yeah. This picture is the guy standing in the background could have been me, and I used that in high school. But unfortunately, that's Paul Allen and Bill Gates. And this is a famous picture. They were using the same machine about the same time, a little bit before me, and it could have been me. But we took different paths.
That's okay.
In high school, it's also when calculators hit the screen, and I bought a HP programmable calculators, a few of them, and I spent all my time in class, like history class, playing with my calculator and learning how to program them. And I get kicked out of history class all the time, and I still remember that very well, and I would argue with them about what was better, learning history or learning something practical like programming calculators. He didn't agree with me, and he kicked me out, and I had to go see the principal all the time. But this primed the pump for my options trading because one of the calculators had a module you could plug into it that came with all kinds of securities analysis, including the Black-Scholes options model. And I was fascinated by that, and I spent hours playing with the Black-Scholes model and how it would calculate options prices, and I couldn't believe that there would actually be a mathematical basis for pricing of options. That kind of primed the pump, and it turns out I still collect HP calculators, and I have a whole glass display case full of them in my living room that my wife wishes wasn't there, but they're my collection.
Well, that's fantastic.
Yeah. So also what started investing is the credit unions at the time, if you deposited money, they would give you things like toasters. And I think this credit union had a deal that if you deposited $500, you could get a toaster. But more importantly, interest rates were something like 6% just for a credit union account then. And I realized that if I deposited $500 or $1,000, I might make enough money in a year to pay for tuition on my college. And tuition then was about $50 a quarter. And I thought, this is great. I can go to college for free. So I worked really hard, saved money, and made the deposits.
Wow, $50 a quarter. I can't imagine that.
Yeah.
You can't do anything for $50 nowadays.
You can't buy anything for that. I did not actually get a toaster because I did it over 2 or 3 deposits over a month, and they said, no, you have to do it all at once, so I didn't get a toaster. Fast forward for a while, I studied microbiology in college. I should have studied computer science and mathematics and investing, but I got my degree in micro, and I worked as a clinical microbiologist for about 5 years. This picture shows you exactly how we did it. We'd grow bacteria on the petri dish. We'd put these little white discs out there of antibiotics to find out what antibiotics would kill the bacteria. And now it's done differently, but that's what I spent all my time doing, this kind of thing in the early 80s. And it got me into, there was a laboratory company called International Clinical Labs, and they were public, and I looked at them and I said, I'm going to buy stock in that. So I bought it. My broker said, no, that's terrible, don't buy it. But I didn't listen to him. And I went and visited the lab, They showed me around, and all I was interested was seeing their computer and how they ran their business. But anyway, it turns out after about, I think only a couple weeks, I made about $700 on that stock, and the broker was totally amazed that I had picked my own and didn't listen to him. I didn't work with a broker very much longer after that. I've been on my own ever since.
Oh, cool.
About the same time, you couldn't get quotes. There was no internet. You had to call your broker, and I had this idea that I'd get the paper where they printed all the stock quotes, scan them in with an optical scanner into a database, and then be able to analyze stocks. And I think that was an idea way before its time. There's no way to get free quotes, but I never made it work, and that kind of fell by the wayside. But I was still thinking about how to do quotes and options and stocks at that time. Now we'll move forward a little bit. I decided to go back to school, get a degree in business, and these are some of the very exciting books that I had to go through to get my business degree. Investment Analysis and Portfolio Management. How you can only get drier than that by reading a book on accounting, financial accounting. But it was a good time, and I went to business school for the express reason to learn how to analyze companies so I could trade stocks better. I wasn't trying to get a better job. I wasn't trying to make more money. That was the whole idea I went to business school for, and it turned out to it turned out to work. So Epoch 3 is when I got out of business school, and this is a picture of my thesis paper. And I wrote my whole thesis about stock analysis and came up with a unique way at the time, I thought, to analyze stocks and decide if you should buy or sell them based on technical analysis. And it was based on moving averages. I wrote computer software to analyze 10 or 20,000 different possible moving averages for a stock and find out which ones work best for which stocks. That paper got me my degree, and it showed promise. I had every intention of trading stocks that way, but life got in the way, and I never actually followed up on it after I graduated.
Interesting.
Yeah.
But you were really into this since you were a young kid, though, huh? This shows that for sure.
All the way, yeah, my whole life.
Wow, that's fantastic.
So I got out of school in '87, summer of '87. I got Metastock. This is Metastock Professional, 1987 version. It's completely different now, but it was the best tool to use at the time to do further analysis. And in here I studied every technical indicator they had because I thought it was the golden rule, or held the answer to all my stock desires. You know, you just have to find the right indicator and you're good to go. Turns out that's not quite how it works.
You were still directional at that point, right? Trying to find the magic system that's going to predict what's going to make the market go up.
That was directional trading, yes. And in business school, we studied surface volatility profiles and capital asset pricing models and all these things. And all of that convinced me that you can't trade directional. It's too speculative and it just doesn't work. Instead, I became to be a big believer in random market theory. You know, that the market moves randomly and once in a while it goes to a new setting point and then it moves randomly around that. And I still believe that to this day, and I still trade based on that. In all of my trading, I do no technical analysis at all.
Okay, that's super.
So I picked up this book one day in the bookstore, and this turns out to be the Bible of options trading. And Lawrence McMillan wrote this in, I don't know, the 80s maybe. I don't know when his first edition came out.
He's still around too.
He is, and he's still active, yes.
Yeah.
I devoured this book in no time flat. This was the best book I ever bought. It primed my options trading. It's a very good teaching book. Even now, what he has in there is a good way to start to learn options, and I recommend this book or the newer version of it. But I used a $20 bill as a bookmark, and I learned all about things like iron condors, which he kind of called combo trades and other things, but this got me started. So in late summer 1987, I started trading options. And you remember what happened in October '87? Black Monday?
Oh yeah.
You know, 508-point drop in the Dow Jones in one day. Well,
right.
I had
Which
positions
from a
on.
percentage standpoint is absolutely insane, right?
That's insane. That would be, Dow Jones was something like 1,000 at the time. I mean, that was almost a 50% drop. It was huge.
Right. Wow.
I had options positions on that day, and I actually made money on them because they were basically iron condors with put protection, and I learned that from this book. And if I remember right, I made about $2,000 on Pepsi that day because it dropped so much.
And that was a lot of money in 1987.
Yes, it was, and also for a kid just out of school. So I guess you could say I got hooked on options after that. I also would point out I was trading with Charles Schwab, and there was no online trading. There was no quotes. You had to call the broker all the time, and they charged a lot in commissions. Now, Schwab had something called Telebroker, which was an automated machine. You could punch in all your numbers and make your trades that way. It took a long time to put a trade on, but you could do it. But I remember commissions for putting on something like an iron condor were like $45 for one lot iron condor. I mean,
Yeah,
we complain about commissions these days. You should remember how it used to be. It was really bad.
yeah, I know. You see that in a lot of industries as well. But the prices really come down. Imagine having to pay $45 to get into a trade. That's a lot. A small trade, right?
Yeah, a small trade. You know, even today, I still trade with Schwab. My commission rate is very good. It's along the lines of Thinkorswim and some of the other rates that we get.
Nice.
Okay, we'll move forward a little bit more. Epoch 5, I call it. I bought this book, and I don't recommend this book, but I did want to talk about it for a minute. What this author did was he said, how to win on better than 9 out of 10 trades with extremely low risk. Well, what he was talking about was iron condors with the shorts 2 standard deviations out of the money. We all know that now. We all know what iron condors are. He didn't say anything about delta or the Greeks. I don't think it's even mentioned in the book. It was all about standard deviation and the statistics of winning 90% with a 2 standard deviation trade. But he also had 5-point wide spreads, and he did not recommend adjusting them or very little adjustments. And if it hit the short strike, then roll that spread down and leave the other one. I mean, these are all things that we know kind of not to do. But because
that's not extremely low risk, right?
That's not extremely low risk. By the time it hits the strike, you're in big trouble. But I traded based on this. I traded iron condors on SPX for 7 or 8 years, all through the 90s. I used to do nothing to them and let them go to expiration, and it's a wonder I didn't get my head handed to me. But I think overall, I made some money and I had some profitability. But I did want to point out one thing in this book. There are some good nuggets in here, and I'm gonna read you one brief thing he says in here, in the chapter called How to Get Started Trading Options. Mm-hmm. The secret to successful option trading is to select a particular option and specialize. Become an expert in your selected option market. That's sage advice for such an early time in options trading. And I think that's something we don't realize that you should do.
It really is, and yeah, I think I push that all the time. There's way too much information out there, and most people get kind of caught up in doing 35 different things instead of just mastering one thing and being profitable. So,
yes.
Very good advice.
If there's any one thing that can turn around your options trading, is to quit trying everything and focus on one thing or maybe two. Mm-hmm. Best
Agreed.
Advice I can give you. Okay, I need to mention this because it's important as well. I founded a company called the Jonathan May Corporation, and it turns out that is my middle name and my fiance's middle name at the time. We got married shortly after that. I worked at Scott Paper Company as a consultant, helping make toilet paper. I spent 8 years helping to make toilet paper.
we all need it.
Yeah, it's something. It's like what do they call it? Consumer staples. You know, the market will never crash for toilet paper. And it's a little picture of one of the paper machines. It's not the one we had, but these machines were huge, and it was a lot of fun working there. My wife also began doing work independently as a communication skills teacher, and she did that through Softtech as well. And Softtech exists to this day. It is primarily an options trading company, and it's my corporation that I work for as a trader, as well as own it.
Nice.
Having a corporation has helped me out quite a bit, so when I go on trips or to seminars, it's all deductible expenses because of the way I have this corporation organized, and that's come in really handy too.
That's fantastic, and you don't have to necessarily have trader status. You can write things off other ways, which is what I like with having a company as well.
That's true. You do not need trader status when you have a corporation because it has it by default. That's how it works when you're a corporation.
Yeah.
Yeah.
And we're not giving tax advice. We're just saying.
Yeah. Yeah. Okay. Let's fast forward to 2009. Is when I decided to really go for options trading. I'd been trading condors and a few other covered calls and things all through the years, but I decided it was time to really get going. I was working at Microsoft. I didn't want to work anymore. I wanted to do this. So I went full blast into turning into a full-time trader. Now this is a picture of some of the books that I read. And again, I'll say most of the books out there aren't going to help you very much, and especially some of these, options books. I don't know if you can see my mouse. Here's one, The New Options Secret, right? It's like, oh, if I read this book, I'm going to be a successful trader. You can pretty much forget that.
Right.
The next slide, however, is some of the books that I read at the time that I do recommend that are full of content and I believe help quite a bit. And here's Macmillan's book again. The new version is 3 times thicker than it was. It's full of all kinds of things that you don't need, but it's chock full of great knowledge and information to help you become an options trader.
Nice.
He wrote a few other books, Macmillan Options, Profit with Options. Here's a famous one, Option Volatility and Pricing. I recommend you read that book, and I recommend you read it about 5 times because you won't understand it the first time.
Right.
I point out this one over here by Mandelbrot, The Misbehavior of Markets. He's pretty much talking about the random walk nature of markets. He's the guy that got famous for fractals. I don't know if you remember fractals and all those beautiful pictures of fractals you see. He's the guy that pretty much got famous for that. He believes the market is fractal, and this is a good book to read.
I've read some of those, but not all of them. I'll have to take a look at some of those. Yes.
Yeah. So also at this time, I went and joined Sheridan Options Mentoring and got mentoring from actually Seth Freudberg, who runs SMB Options Desk now. He was my mentor back in 2009 when he worked for Sheridan.
Wow.
I feel that mentoring was one of the best things that I ever did. I do recommend that for anybody. There's a number of ways to get mentoring. It doesn't have to be Sheridan. There's a number of places out there now. But to go it on your own, even if you read every book you can read, you need someone there to guide you and give you practical advice. Highly recommended.
Yeah, I think a lot of people underestimate the importance of a coach. And I mean, if you look at any industry pretty much now, they all use coaches. Anything that's high performing, whether it be sports or business or stuff like that. And options is a high performance sport, right? So coaching is definitely very helpful.
And then of course, if you don't do it, you're going to pay it anyway. You might as well pay it to coach and get something for the money. Otherwise, you're going to have a loss that'll be more.
Indeed.
Yeah. So I went through that in 2009, and I started trading for my account in 2009 and 10 and 11 and 12, and I'll show you some history of that. But let me finish the epochs in my trading. Forward to 2015, I went to your seminar, APM in Manchester, New Hampshire.
I think so. That's where I met you, isn't it, Tim? That's the first time I remember seeing you anyway.
That is where I met you, but I knew about you since 2011, and I need to tell you a story about this.
Okay.
Dave Thomas, as most of us know, is a friend of mine, and it turns out he lives about 8 miles away from me. And I got to know him through Sheridan because he went through Sheridan as well. And we went to coffee one morning in about 2010, late 2010, maybe 2011. And he goes, I want to tell you something. There's this guy, and all he does is he trades butterflies on the rut. And I'm like, what? Because at that time I was doing everything. I was trying every strategy, every trade, every vehicle, like we all try to do when we get into our options trading. He said, that's crazy. You can't do that. Turns out he was talking about you. And
you're in good company. Dan Sheridan thought I was crazy too.
Yeah, well, okay. Anyway, we talked about you that whole morning and what you're doing and how he was going to work with you, and I started following along with M3 at that time and learning about it. And it wasn't much longer than that I began trading the M3. Mm-hmm. And that was one of the factors in my trading. So now we'll get to some real meat here. This is a graph of my actual trading results from July 2009 until December 2012. Okay, and can you see my mouse moving?
Yes.
Yeah. Okay, well, look at my results. Up, up, trending down, up, down, big loss, big loss. You know, nothing is consistent. And I bet if you average all this up, neither was my profitability. It was probably not much above zero if you add all that stuff up. And this went on for a couple years, from 2009 to 2011. Now there was, when I finished my mentoring, there was a tick up and I had profitable for a while. And then I started, I think, doing things crazy. But if you go forward to here, what happened here going forward? Something happened right here. Look what happened. Profitability, consistency, increasing almost every month, no losses. Something happened right here. Well, I'll tell you what happened. Two things happened. That is the summer that I decided I was no longer going to try every strategy that came along. And you know, we're all listening to webinars and YouTubes and WebExes and all the stuff we can find, and it goes, oh, the ABC strategy is great, I'm going to do that. And then the DEF strategy is great, I'll do that. And then, oh yeah, you know, you can do Amazon and Google and Priceline and IBM. And I did that. The summer of 2011 is when I quit that. And I finally took your advice, and I finally said, I'm going to focus on the SPX and the Russell, and I'm going to focus on butterflies and iron condors. And I quit almost all my stock trading. And you can see it worked. That's when my trading turned around. Now what happened here on the second arrow in early 2012, that was my first M3 trade. After I'd been talking to Dave Thomas for a while, I finally said I'm going to try it.
Sweet.
And look at that helped jumpstart my graph. And so when I got to about September 2012 and I saw this graph that for a year, about a year, had been no losers, been rising, that's when I decided that now I can quit my job and be a full-time trader. And I quit the job about late October 2012 and never looked back. So that's one of my advice to anybody that wants to be a full-time trader. You have to track all your results and you have to see consistency and rising profitability for at least 6 months, and I'd recommend even a year, before you quit your day job. You have to know that you can make this work consistently. Otherwise, I think you're taking too much risk by quitting your day job.
Yeah, there's a lot of things to consider before you quit your day job, and part of that is, you know, sometimes you can get lucky and randomly have good results for a period of time just doing random different things, and that's a recipe for disaster sometimes. So.
And I'm not talking much about it, but you also have to do some serious capital planning. How much do you have in liquid investments? How much are you going to put into options? What is your contingency plan? As you have recommended in the Trading Triangle seminar and others, that's critically important, because if you don't have a solid financial plan when you quit your job, whether or not you make money trading options, you're still in a lot of trouble and taking too much risk.
Yeah, you are. If you don't have adequate finances too, you have a psychological thing to deal with when you get 4 or 5 months that aren't going so well. You know, or maybe you didn't meet your expectations, and then you start jumping around again because you start to freak out. So, very important. Yeah. Good comment, Tim. Yep.
Now, I didn't show the rest of the graph. There is a couple of big losses in the rest of the graph, and they were caused by following somebody. I won't mention any names, but there was one particular person doing a service that I followed for a little while, and it turns out they were taking inordinate risk, and I lost something like $10,000 in the time it took me to drive home from Starbucks one morning. And that's when I decided, nope, I will never follow anybody again. I'm always on my own. I can do this. I don't need to follow anybody. And that's good advice as well.
Yeah, I think that's fantastic advice. You know, one of the things is you're immune to the risks that you're taking when you're following somebody, and you really don't know how that person is with risk. We've seen some fairly good mentors go out of business lately, or pretty much almost out of business, because you know, they've been taking on too much risk for years, and they finally got whacked by it. So, very important to understand your risk.
Yeah. Okay, let's move on. So here is a summary of my M3 experience. Since 2011, I've made 117 M3 trades. And you might say, how did you do that if you do one a month? And the answer is I do it in 4 or 5 different accounts, so I count those all trades. Of those, I've had 87 winners and 28 losers. 2 trades are currently open.
Nice track record. Right.
If you just count the winners, my average is 5.26% return on actual capital used. I track the highest capital I use at any one time during the trade, and I call that actual capital. So, planned capital might be 50,000, but actual maybe is 40 or 60 or something like that. So that's how I calculated that number. I have averaged 27 days in trade, over 117 trades. And I say I trade M3 conservatively. I want to talk about that for a second. I want out at 21 days. That's the first thing I do. I want in at 56 or maybe a little more. I will take lower returns so that I can get out early. And I haven't always made it out at 21 days. I've gone down to 14 or maybe even 10 days, but I don't think I've ever gone later than about 7 or 8 days in the trade. I've never gone later than that. Now, I'm not slamming that. I really admire the people who can do that, and I wish I could, and I'm planning to work on it, but currently I don't. The trade is done for me at 14 days or so. I'm out.
Hey, there's nothing wrong with that as long as it's working for you. So that's like I said, that's a great record doing that, and you just keep doing what works, right?
Yes, and I would probably have higher returns, or I expect more variable returns if I went further, but this is what I'm still doing to this day. Now, I always tell everybody, do not trade options with more than about 20% of your liquid net worth. And I follow that myself. So of all my options trading and all the accounts I do it in, only 20% of my liquid net worth is used for options trading. The rest is about probably 40-50% in cash at all times, and maybe 40-50% in long-term income dividend strategy. I have some stocks, I have some ETFs to try to get as much dividend as I can, because eventually I hope to live off dividends.
There you go.
Yeah. Currently, my allocation that I do, 40% of my options trading capital is used for M3s. 40% I'm doing the road trip, which Dan Harvey is the captain of, and maybe 10% in cash secured puts, covered calls. I do this little 4-day to expiration iron condor once in a while, and once in a while I do a naked put in SPX in a PM account. That accounts for about 10% of my trading.
Okay. Yeah, I mean, occasionally selling those puts is the price is up and the markets, it's down a lot. It's just a good opportunity to do that. So.
Yes.
Nice.
And I just consider that, movie money, so you can go see the movies.
Thanks.
Yeah. Okay. That is the end. I put this picture here because, now I'm going to take my trading to the stars. I'm going interstellar on my trading. That's the plan.
Fantastic. Where was this picture taken?
Actually, I didn't take it. I found it out there somewhere. But there's a place I go to look at stars about 200 miles from here, and this is what it looks like. You can see the Milky Way like that with the naked eye. It's beautiful. It's just breathtakingly beautiful.
That's fantastic.
So going forward, what I'm doing now, I have started being a mentor on Capital Discussions. I have 5 students active right now that I'm teaching butterfly trading to. And
Nice.
I have just recently started trading as a trader on the SMB options trading desk. I'm very proud of that.
Yes, congratulations.
So Seth Freidberg runs that desk, and it's fun to be working with him again. He's a good guy.
Yeah, Seth is pretty awesome. So did you have some trades you were going to show us too?
I do. Let me bring that up here.
Okay, fantastic. So how did Tim had some beautiful pictures of the stars for those people who like them up from, you took up in Hawaii when we were up there.
Hawaii was the most beautiful star watching site I've ever seen. It was the highlight of the trip for me.
That's fantastic.
Yeah. Okay. This is an M3. This is an actual trade that I did, but I reproduced it in BackTrader. Opened on April 20th, 2016. I'm showing you this not because I want to show you a successful M3, but because I want to show you how I use weekly calls and talk about that a little bit, and how I roll down when you have to roll down. This trade worked out very well. There's any number of trades that work out very well, so that's not what I'm trying to show here. I'm just trying to show how I managed it.
Sure.
10 lot M3 centered at 1100 when the Russell was at 1144. Nothing unusual there. I almost always use weekly calls now, and I'm looking for a call with very little time premium, maybe 1 to 2 weeks out to open with, and I like the delta being way up here. And these two things will go hand in hand. No time premium and delta will go hand in hand. So usually I'll select a call with 97 to 99 delta. The thing to note is that if you did it in the month you did the butterfly in, a lower delta call might cost about the same, and if you went up to a equal delta call, it's going to cost a lot more, thousands of dollars more. So weekly calls can save you a lot of margin on these M3 trades, and the only downside is that you have to remember not to let these calls expire and be without a call. And I know that because I did it, and I had a very unhappy weekend waiting for the market on Monday. In fact, I went and bought futures, or sold futures to try to neutralize my delta a little bit because I didn't have any calls. Turns out it was okay, and then I bought calls on the Monday and got the trade back on track. But this is how I usually start out in M3.
Right, so basically a little bit negative delta, and yeah, and you probably only have, what, about 20,000 in that maybe, right? 22,000?
Yes, 23,000, yeah, for a 10 lot. And in fact, it doesn't go up much over the life of this trade, and most of the time you can manage it so that it doesn't go up much more than that on almost any M3 trade. So let me go forward to the first trade, and let me see if I can take it. So April 26th. Now, my numbers are good. There's nothing to do to this trade. I'm starting to get a little profit. Nothing is threatened, nothing to do really. But on this day, I rolled the call up 1 week. And I did that because I could do it for a credit. I got about 30 cents credit for doing this. And even brokers will tell you can't do that. It doesn't work. In fact, Options Express won't even let you enter this trade as a good till canceled for a credit. It has to be even or debit.
But they fill it.
but they will fill it, yeah. So if I click Show Today's Trade, you can see I simply rolled it up, and I did get about 30 cents credit. It doesn't fundamentally change the numbers, doesn't change P&L, doesn't change the trade or what you do. And now I'm a week out, and I actually got a credit. That takes more margin out of the trade.
It does. And,
not much, but a little bit.
I know David Heinzen talks about this a lot. And I do the same thing. I look for if I'm in weeklies, I look for opportunities to roll them, and you can do it very efficiently. Yeah.
And so now, not only do I have a good till cancel order in to roll it for a credit in case it fills, but every day I watch the next week and maybe the next 2 weeks, because sometimes you can even get a credit going 2 weeks on this roll. In certain conditions, you can get filled for that. Okay, now I'll go forward. Let me uncheck this again. We'll go forward to the next trade, May 9th. Here's another example. Look at these prices. It's even. And I'll usually roll for even because it's an opportunity that you should take. We had 11 days to go. I could have waited a few more days before rolling to try to get a credit, but it also could go the other way. So I just took this opportunity as well and rolled again for even. If I put that trade in, change the delta about 1, but my P&L's adding up. Everything's working like it should. The trades are running great.
Now, do you ever go higher? Like a lot of times I'll go to a higher strike price.
Occasionally I will. I will look at that because by doing that you can take thousands of margin out of the trade. And if the market has gone up a lot, it would make sense to do that. The problem is going higher, you're getting a little bit closer to the money, and it's harder to find time premium that is very low. You know, like this one had $1.25 and I wouldn't have done it. The most important thing to me is to have little or no time premium when you roll this.
Okay.
Yeah. This trade, the market didn't go up a lot, but if it's gone up 50, 60 points, yeah, I'll roll it up 20 or 30 points, something like that.
Right. Cool.
Okay. here we are on May 9th. Now the next trade happened. Let me ignore it and go to the next trade, May 12th. Now here, I have to adjust the trade. Let's look at the graph for a second. We're just below the shorts. That's usually where it happens, somewhere in this area. And being a 10 watt, I've exceeded my delta limit of 50. That's just standard M3 rules. That's nothing special.
Right.
Vega was still negative, but I had to do something. So what I do when this happens as a first attempt is I will roll. I don't just start by repositioning the trade downward. I'll do that if it gets to that point, but I'll start by just rolling down half of my shorts, 10 points or maybe 20. It gets my delta under control without changing the sign of the delta usually. Vega's still good. It's a conservative trade. It's not an aggressive trade. And the main reason I do that is because if I now have to roll this down, I still have one single order, a condor, that I can take this trade off with. I don't have a mishmash of verticals and butterflies and stuff. I still have it easy. You know, if I only rolled down half of these, then I'd have some funny verticals to do, and it's just more work, and I don't want to do it.
Sure.
Market keeps going down, then I probably reposition this whole thing down 30 points or something like that. So on this day, that's what I did there. And then I exit this trade. Let me just make sure, is that what's in here? No. I exited this trade on May 12th for this much profit on 23,000, which is a little over 10%.
Mm-hmm.
In fact, by the time I did that roll down, I took some margin out of the trade as well, so I was only down to 17 at the time. And you know, 10% is good enough for me. That's all I wanted, and I took it off. Very successful trade.
Yeah, that is fantastic.
So of course, as we usually do, we look and see what would have happened had we stayed in, and it would have made something like 20% if I'd been in only another week. But you know, that's just a learning opportunity. I don't beat myself up for that. I just, you know, I was happy.
I actually think it's a good idea to take these trades into expiration on paper and actually trade them like you would really trade them, just to see how things happen and to train yourself for doing that. I actually think that's a very good idea. But when you do that, you have to document it properly, because your memory is going to fail you when you think you won all those trades. You would have won them all, and reality is you probably wouldn't have. So that's part of the thing we talk about, right? Is your memories are not real. Your memories are, you choose to remember what you want to remember. So
that's exactly right. That's exactly right. And while this graph looked perfect, there, you know, you could just easily stayed in this trade, but that was enough for me.
I think I've said that before. That's my favorite place to leave the trade.
Mm-hmm. Mm-hmm.
Marble on the hill, acceptable profit, time to go home.
Good. Yeah, good. So that's what I had to show here, how I got to be where I am. And
right, that's fantastic. So just a couple of questions here. Do you think $2,500 on a 10 lot is enough profit to take the trade off anytime?
Sorry, it depends on your goals. I'll be looking at this as percent. Now, how many days were we in this trade? We were in this trade for not quite a month. If I've got 10% in a month, I'll be out of almost any trade. That's a gift horse. You've got to take it.
Yeah, one of the things that I like to say, see if you agree with me, Tim, is that how much you're willing to take for a profit is directly related to how much you're willing to lose when things go poorly.
Yeah, yeah.
If you're going to let the sucker draw down if you're going to let the sucker draw down 10 grand, you don't want to be taking it off at $2,500 profit. So.
Right. And you also have to remember, if you have set up your trading plan, and therefore the lot size that you're going to trade these, such that a modest win still lets you make your budget for the month, then you have to take it off. That's your trading plan, and I think it's a good plan. So I actually will prefer to trade a higher lot size but take it off earlier and still make my budget than I would to maybe trade a smaller lot size and hope to get higher percent profits or higher dollar profits, but have less consistency. That's my choice. That's kind of how I've set up my trading plan.
Yeah, and I think either way is correct as long as your losses and your gains are representative of one another.
Yeah.
Yeah.
So
let's see. John Porter's asking.
M3 has been.
Okay. Sorry. Go ahead.
Oh, I was just going to. M3 has been a very good trade to me, and you might ask, why do I do Road Trip as well? Because they're both butterflies.
Sure.
Road Trip, in my opinion, is semi-complementary, or your BWB, same thing basically. It's semi-complementary in that a raging upmarket or even a grinding upmarket isn't going to hurt a Road Trip, or you aren't going to work on it as hard as you will have to work on an M3 in a market like that. And so for that reason, I call them semi-complementary. And then to the downside, usually an M3, or I'm sorry, a Road Trip won't need to be adjusted at the same time an M3 would, depending on where your strikes are. And so you can work on your M3, and then if we keep going down, you can work on your Road Trip, so I don't get slammed doing everything at once. So to me, it's a good mix of trades to kind of fit together that way.
Yeah, they are very similar in one respect, but they do have minor differences, and they're in different assets. So sometimes the SPX is better priced, sometimes the Russell's better priced. You're in two different assets. You're in two similar trades, but in different assets. So there's a little bit of diversification there as well, I think.
Yes.
Yeah. So John Porter is asking if you're still doing the parking trade, which is essentially the same thing as a Road Trip trade, more or less, right? It's a broken wing butterfly type of trade that's somewhat similar.
Well, actually, parking trade is a out-of-the-money credit spread. That's all it is. It doesn't have a butterfly component to it.
Okay,
but,
I should know this because David Thomas made it up, right? So.
Yeah, him and I actually did it together in his living room one day. That's another good story. But the thing is, you know that by rolling down your top longs, you can turn BWB into basically a parking trade. By the time you roll them down to your shorts, what you're left with is a credit spread or a parking trade. Right. Now, I don't routinely do that with a BWB. I'd rather not go that far with it, but they're related in that aspect. And then, of course, credit spread is half of a butterfly. So, yeah, I don't still do the parking trade all the time. I will do it. I wish I had done one yesterday when the market was down. I even was thinking about it, but I kind of got busy with a lot of other stuff and I couldn't do it. So I do them occasionally, but I don't do them as a mainstay trade anymore. And I don't do them if it is below its 200-day moving average, for example. That's kind of something I've decided on, just focus on something else.
Right, because it's essentially a trade where you don't want the market to come down, or it's more sensitive to a down move. Is that correct?
More sensitive to a big down move.
Right.
Normal down moves I can handle, but these 50-point days on the Russell, if you're doing a parking, it's going to cause you some trouble. Yeah.
Right, a little bit of heartburn there. But yesterday was a really good technical entry to go along with the. If you're watching the NDX, like we were talking on the trade updates, the NDX came nice right into a support level yesterday. So definitely a good, at least a short-term long trade there. So nice.
And look what it did today. It would have been a great entry. Yeah.
Yeah, would have been fantastic for sure. All right, well that's great, and I guess there's no more questions. I'd like to thank you for coming on with us, Tim. We got, hopefully everybody gained a lot of insight. You certainly have been putting a lot of, you've been pretty much wanting to be involved in the market your whole life, and you finally made it. So congratulations.
Yes.
Okay.
I'm very happy. Okay, well thanks for having me, and thanks for doing everything you do, and we learn a lot from you, and it's all helpful.
Well, you're welcome. We'll continue to make good traders great traders, and again, thanks for coming on.
Okay.
Yeah, bye.